Hello, good morning. It's Monday the 8th. I'm FX Plu. I forgot to charge the air wheel, so I'm on foot this morning for the market brief. So the Bank of England left rates unchanged last week. Governor Bailey's been accused of misleading the markets. On Friday, he defended the MPC decision, saying it isn't the bank's role to steer markets in advance of his actions. He said that any comment about the need to control inflation was conditional, and he contended the decision was based on all the latest economic conditions. Whatever led to the MPC vote of 7-2 to leave rates unchanged, his credibility has been affected, and it may take some time for the market to trust him once again. Also, as inflation continues to climb, it means that when rates are increased, they may need to rise higher and faster. We'll see what the market makes of that at next month's meeting. In the market, having bought into the rumour, they certainly sold the fact, and sterling sold off pretty hard after the rate decision. We dropped to 134.25 against the dollar and about 116.35 against the euro. Looking ahead this week, we've got Q3 GDP data due. The economy is always expected to slow in Q3, but the Bank of England decision has raised a few concerns over how much lower GDP growth may be. We'll find out on Thursday, but a poor data release there may further compound the sterling sell-off. One to keep an eye on. Over in the US, non-farm payrolls bounced back in October. The headline number there was 551,000, and Paul Price took the top spot. His bid was so confident, it was accompanied by the suggestion to ritually embalm him for the win. Well, ladies and gentlemen, I was brought up to believe it's not arrogant if you can actually back up your chat. So well done indeed, Paul. We have market data family fortunes in the lead up, and this victory means the price is right can also be dropped into proceedings. Bravo indeed. The unemployment rate fell from 4.8 to 4.6, and although the Fed's decision to begin tapering now looks justified, the economic recovery does remain fragile. Staff shortages continue to be an issue, and this may lead to more volatility in employment data in the coming months. Biden's $1.2 trillion infrastructure bill was finally passed on Friday, so this will give the economy a different type of support going forwards. But all in all, the payroll data was well received and the dollar rallied into the weekend. Inflation does still remain a major concern though. CPI is expected to have steadied around the 4% level. We'll get an update to producer and consumer inflation this week. That data is out on Tuesday and Wednesday respectively. Right, that's it from me. Have a great week. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.